Hey guys, Bill Spadea here. I am joined by the CEO of Aspire Credit Union, Tom O'Shea. Tom, welcome to New Jersey 101.5.
Hi Bill, thanks for having me.
So I know we had talked a little bit off the air about student loans and the crisis that some, not only kids but families go through when they don't start saving soon enough, and then they're looking at this enormous bill that is going to come due someday. What is some advice that you give both parents and students as they take that next step, especially parents of kids who are freshmen, sophomores in high school right now looking at that?
Well, I think there's two parts of it. First, as a new parent, you need to start saving immediately. And I've told my son, who now has a child, I'm a grandfather.
Congratulations.
The baby's just coming up on a year. I said, at least put $100 a month.
Yeah.
That's $5 a working day. It's a cup of coffee.
Yeah.
Put that into an account for him and start saving for his college education. And that money will grow to be several $1,000s. And it'll take a big chunk out of the
So at least
cost
it's
of
a start.
education. Right. And then from a parent standpoint, you've got to start looking at a couple things. You've got to look at the cost of the education versus the economic value. So when you're right at this point in time of the year, kids have gotten their acceptance letters and they're getting ready to go to school, but look at what that degree is going to be worth to an employer. I use the analogy of a car dealer. If you go to a General Motors car dealer, you'll have a Chevy and a Cadillac in the showroom. You don't expect to pay the same thing for those two cars, even though they're basically four wheels, motors, doors.
So
engines.
do you think, Tom, that there's a change in mindset? Because I talk about this often on the air, that I think there is not enough focus on vocations and people that are going to get out there in the real world and do work that may not even necessitate a college degree, where there's this huge drive to go to college and just get into debt.
Yes, there's the expectation, rightly or wrongly, as you're saying, is that they go to college, but that's not necessarily what a kid needs to do. They need to look at what they're good at, what they're passionate about, what they're interested in. There are great jobs in all the trades that don't cost $100,000 or $150,000.
You go be an electrician for a lot less than that. Plumbers, and they're making six figures. Many of these guys.
Absolutely.
Yeah. And what about so the advice then really is take a long look at this as an investment. That it's not just getting this ticket punched as a four-year college. What's the investment? What's the return on that investment?
What's the return on that investment? Because a history major or a sociology major, with all due respect, noble causes. Won't earn as much as engineering.
So I get it. I was a history major and I talk for a living. So, but it's a great point.
But they won't get the same economic value. Yeah, you're going to have the same amount of debt for that history major or that engineering, the STEMs, this, science, technology, engineering, and math majors. Yeah. So you've really got to look at that and see what makes sense.
How does the credit union help them? Because I've said this, and I've said it on the air, and my wife and I are members of two credit unions, and we've never looked back. I mean, the service is just better. That personal service is something that is really unmatched.
Right. Well, what we do with our students when they come to us, our members, is we say, look, first thing you need to do is find out all of the grants and scholarships and all of the free money that you can get. Once you know what that number looks like, then you need to go to the federal government website, the FAFSA, free application for federal student aid. And it's totally free, and that's important because there are companies out there that will charge you to fill these forms out. And it's very easy to do online. That tells you what you qualify federally, and there's a ton of federal money, ton of federal programs that you can qualify. Then if you still have a gap, then you look at the private student loan, which we offer. So that becomes then the freest, the lowest, the easiest, the needs-based money, and then the money that, we need to fill that gap.
So parents and students who are in that, right now in that window, whether they've got kids in middle school or in high school, they ought to come and talk to you.
Yes.
And get a plan together.
The sooner the better. I mean, we go right back to the newborn and say, you've got to start there.
But start now.
It's never too late, but you need to start to plan that out.
So the first step is to get to Aspire Credit Union.
Right.
And start making a plan.
Give us a call, come online.
That's great. Thank you, Tom. Good to have you. That was Tom O'Shea, CEO of Aspire Credit Union. Awesome.